Yeah, good morning, everyone. So yesterday again we saw US market moving up, uh, led by mainly corporate results coming over there. Apart from that, tomorrow there will be Fed meeting, so some concerns about that. Some other concerns are also emerging as commodity prices has again started moving up. Oil has moved up to over $83, around $83. Which is one of the highest in recent past. So, apart from that, we are seeing some inflation in commodity, agri-commodity like wheat also. So, some concerns are emerging. So, need to be watchful how the commentary from the Fed comes tomorrow as the interest rate increase of 0.2 is factored in. The point is that whether the Fed will indicate about further zero point 0.5 increase thereafter or not. Apart from that, Asian markets are also showing positive trend, mainly on account of officials in China are indicating that there could be some stimulus and which is supporting the market and also the commodity prices as well. Iron ore and steel are also up. Steel is up by around 2.5%. Iron ore is up by around 0.5%. So overall seems like more of a positive day for today. I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. This is Swati. Today, the market is likely to open on a flattish note and we're likely to witness a sideways momentum during the day. On the technical front, for the today intraday purpose, the resistance is placed at 19,740. Any move about that level, we expect a positive momentum to be carried forward towards 19,840 to 19,900 levels. Whereas on downside, as of now, the immediate support is placed at 19,600. If it's break that level on the closing basis, then we are likely to witness more selling pressure, which might take a Nifty towards 19,500 to 19,400. Now, from the last 2 to 3 trading session, we are witnessing that the Nifty is not able to surpass 19,800 levels, which gives some sort of a cautious sign. Also, the interesting point is that on the hourly chart, the stock has Nifty has formed the head and shoulder formation and the neckline, which comes to it around between the range of 19,720 to 19,670. So any move about that level, we are likely to witness selling pressure or set of profit booking into the Nifty. So we advise the clients to book the profit on every rise or just keep your stop loss trailing on the higher side. Now coming towards the Bank Nifty, for today intraday purpose, 46,180 will be the first resistance level. Any move about that level, we expect a positive momentum to be carried forward towards 46,380 to 46,400. Whereas on the downside, the support is placed at 45,750, 45,500. So the view on the Bank Nifty will also remain cautious as long as it trades below 46,400 levels on the closing basis. Coming towards the Fin Nifty services, 20,600, 20,680 are the two resistance level for the today intraday purpose. Whereas on downside, as of now, the support is placed at 20,460 and 20,400 levels. So the for the overall market will remain cautious. Book your long profits and or hold the long positions with the strict stop losses. That's it from my end. I request derivative team to take a call forward.
Yeah, thank you, Swati. On the derivative front, looking at the overall open interest, open interest hasn't increased that much. In the last 4 days, there was a good rise, and then it has been flat in the last couple of days. PCR has come down after the selling. Also, the VIX continues to remain below the 12 level. So, all in all, data is still flat now again. The only problem is, as I said yesterday as well, 19,800, 900, 12,000, 20,000 strikes. They have considerable amount of call built up, and that will be a difficult thing to break. So once liquidation is seen in these strikes, only then you'll see further buying coming in. So more or less, we are looking at a flat couple of days for Nifty, where 19,500 is a support area, and 19,800 is the immediate resistance area. From the stock specific front, we have seen some good buying happening in select stocks, but there's no real, sector that one can say where a lot of buying is going on. So yeah, definitely we are seeing, Canfin Home or certain finance stocks doing well. So the likes of Canfin Home, L&T Finance, Piramal Enterprise, they should do well going forward. There is some good buying going on in these stocks with a rise in open interest. So longs are being built in. So we might see a good rally in the next few days in these stocks. Look at the same. While Coal India, a lot of shorts have been covered. So most likely the stock is going to go up quite significantly up to the 255 to 60 odd level. So yeah, it's a good upside from current levels. Look out for the same. Yeah. So that's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. On the results front, Tamil Nadu Mercantile Bank result was okay. It was weak on the operational side. Advances growth it declined by 2% sequentially, and on year-on-year basis it was up 10%. Net interest income as well as profit before provisioning both declined sequentially, and GNPA also witnessed an increase from 1.4 to 1.6%. So result was neutral, and our view is also neutral. Canara Bank result is above expectation on all fronts. Net interest margin remained flat. We have seen that most of the large private banks have witnessed around 10 to 20 basis points decline, but so look from that perspective, the performance was good. Credit cost was lower at 1.3% at multi-year lows. Even ROA touched the 1% mark after many years. So we think that the Canara Bank can outperform. Jammu and Kashmir Bank result has improved. Credit cost remained subdued at just 40 basis points. NPS continued to decline. ROA was at 0.9% and stock is trading at 0.9 times. We remain positive. Poonawalla FinCorp result is above expectation. Growth momentum continued and disbursements reached all-time highs. Loan growth was at 41% year-on-year, 10% sequentially. Cost to income declined to 35% and credit cost remained low at just 60 basis points, leading to ROA of 4.8%. So performance seems to be very good, and stock can continue to outperform. Stock is trading at 25 times FY25. Although as the growth of the company is much higher, 30% plus, we think stock has in the near term potential to re-rate to 30 times. PNB Housing Finance result has improved on all fronts. AUM growth was at just 5% year on year, but if we look at the retail segment, Over there, the growth was 13% year-on-year, and mix has now increased to 94%. With retail mix rising, NIM improvement continued, and NPA levels continued to decline. ROA crossed the 2% mark after many years. ROE reached 12%, and stock is trading at one-time price to book. We think this stock also has some potential for re-rating and remain positive. HDFC Asset Management result has improved. AUM grew by 8% sequentially, whereas core revenue and core EBITDA grew 6% sequentially. This was the second consecutive quarter where we saw the market share increase. It increased by 20 basis points to 11.3%. We are positive on HDFC AMC. Spandana Spurti Financial, NBFC MFI result has improved. AUM grew by 4% sequentially and 60% year-on-year. 60% annual figure is optically seems high because last year there was a write-off, and that is why the base is low. Key highlight was that asset quality continued to improve with 0+ days past due now at just 3% versus 3.6% in March. Net NPA also is now at just around 0.5%. So from here, there is good visibility that credit cost, which we saw in this quarter of just around 1.3 odd percent. So for the full year, we can expect around 1.5, 1.6% kind of credit cost, and ROA between 4.5 to 5%. And accordingly, stock has some room for upside. AUM should grow at around 33% CAGR over next couple of years. We are positive on Spandana Spurti. Thank you.
Good morning. Mahindra Logistics has posted in line with expectations set of numbers for the quarter, with revenue coming in at 1,293 crores, which is up 1.6% QOQ. EBITDA margin came at 5.2% versus expectation of 5.1%. PAT loss widened to 8.6 crore versus QOQ of 0.8 crore. Stock is trading at a PE of 60 times FY24 EPS. Thank you.
Yeah, good morning. Tata Steel result was in line with expectation. Volume came in at 7.2 million ton versus 7.8 million ton quarter on quarter. Revenue declined by 6% quarter on quarter due to lower volumes, which was partly offset by higher realizations across geographies. EBITDA per ton came in at 7,186 versus expectation of 7,015. On the standalone front, volume came in at 4.62 million ton versus 4.98 million ton quarter on quarter. Raw material cost primarily increased due to higher coal cost consumption and purchase of scrap, which resulted into lower EBITDA per ton quarter on quarter. On the Europe front, volumes came in at 2 million ton versus 2.2 million ton sequentially. EBITDA per ton continued to be negative at 7,890. The company has its con call today where further details are waited. Apart from this, there are reports in the media that Adani Group and JK Lakshmi Cement are bidding to acquire Sanghi Cement, which is valued at 6,000 crore of enterprise value. The two bidders are soon likely to start due diligence and may make their offers over the next 2 months. Earlier, there were reports that Shree Cement and Nirma Group and also Dalmia Bharat had submitted bids, but they are no longer in the running. Thank you.
Good morning. TVS Motor Company Limited results was in line with expectation as the revenue came at 7,218 crores versus expectation of 7,356 crores, which grew by 9% sequentially and grew by 20% on YOY basis. The EBITDA margin came at 10.6%, which was in line with the expectation. And further expansion can be seen on softening of raw material cost in coming quarters. The employee cost went up on account of appraisal cost of rupees 43 crores and it also recruited new people in the EV department. As of now, the company is focusing strongly on EV front, and the company is planning to launch new models in the two-wheeler segment besides launching of electric three-wheelers in second quarter of FY24. The company is also looking to expand EV touch points from 309 to 600 by the end of FY24. The stock is trading at PE of 34.1 times of FY24 EPS. Craftsman Automation results were in line with expectation, as revenue came at 1038 crores versus expectation of 1020 crores, which grew by 5.8% sequentially and 53% on YOY basis. The EBITDA margin came at 20.6% versus expectation of 19.9%, and which was flat at 19.2% on QOQ basis, but lower on YOY basis from 24.3%. The stock is trading at PE of 26.3 times of FY24 EPS. Thank you.
So apart from this, DCM Sriram has reported poor numbers. Across the business, we had seen margin compressions, whether it is chlorovinyl, that is caustic soda and PVC, and then sugar also had seen substantial decline. And also, the improvement in the seed business was also not there. It was more of a flattish year on year. Home solution business also saw decline. So across the board, we had seen declining numbers for DCM Sriram. So stock may see corrections in today's trade. Stock is trading at around 20 times trailing PE multiples. Apart from that, even the Dwarike Sugar company, which has reported the numbers during the market hour, has also reported a comparatively softer number, wherein sugar profitability has come down, though distillery profitability was supportive. But overall, the results were soft, indicating that the sugar companies in this quarter are likely to report poor numbers, not very attractive. We have seen two companies reporting numbers yesterday in initial stage, that is Dwarke Sugar and then DCM Sriram, one division in sugar. So need to be careful in sugar stock for the results. Then Soper stock has reported in-line numbers. The revenue and profitability were more of a in-line. Revenue increased by around 5% year on year, and also EBITDA margin was also has improved marginally to 17.3% versus last year 17.1%. Stock is trading at reasonable price. So, so that's all from us. I'll request commodity team to take up from here.
Thank you, sir. Very good morning, all of you. For today's trading session in USD and yesterday we give a sale call on USD INR. So for today's trading session, we are expecting some range bound movement in the range of 82.67 to 81.92 levels. If we get any pullback around 81.89 levels, so one can initiate a short position with a stop loss of 81.95 for the target of 81.68 and 81.58 levels. In JPY INR, if we get any pullback around 58.03 levels, the one can initiate a short position with a strict stop loss of 58.25 for the target of 57.70 and 57.60 levels. In GBP INR, the overall trend is very bullish. If we get any levels, trading levels around 104.80 to 104.65 levels, one can initiate a long positions with a strict stop loss of 104.53 for the target of 105.32 and 105.54 levels. Thank you.